Hello, everybody. Today, let's discuss one of the companies that's been on my radar for some time, and I have been, watching it as it grow. I'm not too sure. I don't know the reason why I haven't jumped into and started investing into this company, but I think it's a company that's going to be around for a very long time. There's no reason for it to go away. People will continue to need products. So Uh, today we're going to discuss Canadian Pacific Railway, ticker symbol CP on TSX. It's currently trading at $110.87 Canadian, market cap of $103 billion. Price to earning ratio of, a little bit high, uh, at 35. 52-week high is 111.43, so it's trading at 110.87, so almost it's at its 52-week high. 52-week low was really good, $86.12. So there was, I looks like, I have missed the opportunity. I'm not too sure why I wasn't following this stock. It should have been on my watch list, but it wasn't. But let's talk more about this stock. So Canadian Pacific Railway, it's a railroad company in Canada that owns their own train tracks. So they move goods, sometimes produce, sometimes coal, sometimes, earth metals from one end in Canada and somewhere in Canada, all across Canada and into the US as well. So they have even the ship containers that come in at the seaports. The CP rail is used to move ship, those ship containers as well. It's been around for very, very long time. I believe the headquarters of CP Rail is somewhere in Calgary, I believe. I was looking at it right here. Right, so founded in 1881. It has almost 13,000 employees and headquarters in Calgary, Alberta. The revenue is $2.3 billion, up 19% for the year. Operating expenses are up as well. Net income of $891 million. Net profit margin, earnings per share is $1. So this company is a good company all around. Let's talk about the competition to come in and start taking over and beating CP at its own game. So one of the biggest barrier of entries that I could think of is the railroads, the train tracks that they own. It is very unlikely that government of Canada will allow other companies to come in and start building train tracks to take business away from CP Rail. You know what? The other factors that are a barrier to entry are all the environmentalists out there. Not letting CP Rail to come in and start taking down the trees and start building railroads. So yeah, the barrier of entry is absolutely the huge barrier of entry for any other companies to come in and start taking business away from CP Rail. And tech companies they've been on the increase for the last few years. Over 10-20 years we have seen tech companies grow quite a bit. But CP Rail, as you could see, you're looking at the data in front of you, from 2010 all the way to 2022, they are on a gradual increase. You could see their stock price was trading, just under $20 back in 2010, and now it's almost at $110. So even though there were, in 2008, there was a, economy crashed, the markets all around the world crashed, but CP Rail continued to do good. Even 2020 to 2022, even after the Russian invasion, we saw a dip in the market. There was quite a bit of a loss in the market, but CP Rail continued to do good. So I think the CP Rail, with everything that's going on in their favor, and people will continue to buy stuff, the goods will continue to come from other parts of the world. The coal, the earth metals will be moved all across Canada and US. I think CP Rail is a good company. I don't like the fact that it's trading closer to its 52-week high. So I will monitor it. We'll continue to watch it. If it goes down to 19